Thank you, ladies and gentlemen. Good morning. Unfortunately, my French skills don't extend to the ability to deliver a presentation in French, so I'm going to try and speak as slow and as clearly as possible, and hope that the translator can follow my presentation. I'm going to, in the interest of time, kick off pretty quickly. My name is Hugh Friel. I can confirm that this is Hugh Friel this time. I work on the local currency capital market development team within EBRD, which is a team focused on developing the banks and delivering upon its objectives for local currency capital market development. Just going to give a brief overview of what it's going to cover. I intend to cover some of the joint IFI efforts that we've been involved in as part of the Development partnership, and some of the assessment work that has been done. Then relate some of the findings of this work back to the more of the topic that we are addressing today in relation to SME and corporates' access to finance via capital markets. And I think then move on to present some of the potential improvement levers, and hope that this will set some of the background and context for some of the discussions later on in the panel discussions and in the Q&A. And then just give a bit of a very quick overview of some of the things that EBRD currently is engaged in with Morocco, and just then very quickly to conclude and set some questions and the tone for the rest of the workshop. So I'm going to try and catch up on some of the time that we've lost. So basically on the capital market joint IFI work, as you may well be aware, the G8 finance ministers under the Development partnership have a specific module entitled Capital Market Development, which is co-led by EBRD and AMF, but also involves all the other IFIs from World Bank Group, African Development Bank, the Arab Monetary Fund, the Islamic Development Bank. And as part of that, there's been assessment missions undertaken in four transition countries, including Morocco. The Morocco mission took place in March 2013, and it really covered the entire scope of what is relevant to capital markets, from the macroeconomic environment straight through banking, money market, hedging market, the government debt market, corporate bond market, equity market. Also covered Islamic finance, given the relevance to the region and the potential in that sector. It also covered investor base and market infrastructure. The assessment missions tried to identify some of the bottlenecks or current impediments that were identified that need to be addressed in order to further capital market development in the region, and set out a series of sequenced recommendations. So to improve the functioning of capital markets. I should say, by the very nature of these reports, they become quite dated quite quickly, and the recommendations need to remain flexible enough to adapt to the current and evolving environment. Some of the recommendations that are outlined in the report are already being worked upon by EBRD and also by other IFIs. So really the purpose of the assessment missions is really to advise the policy dialogue efforts of the IFIs, and to ensure that each of the IFIs are intervening in a way that maximises their own mandate and their specific set of expertise. Very quickly, I wanted to present an illustration. I won't dwell on this given the timing, but it captures very well in an illustration what some of the sequencing concerns is that or sequencing factors that are relevant when it comes to capital market development. It's not ideal in that it doesn't really reflect how each of these interact, but it does give an idea via the triangular shape around how markets evolve from early straight through to more developed and finally advanced markets, and that all of this is really must be framed in the legal and regulatory framework and the macro and financial stability that is relevant to that market. The one thing, like I said, is that each of these factors interact with each other. So really, from an IFI perspective and in relation to the recommendations, it's important that we're aware of that, and that recommendations are sequenced appropriately, and that we as IFIs make interventions in areas that we feel are most impactful. Moving on to some of the issues that the assessment missions have identified in relation to specifically to the topic today around the current financing environment. The banking sector has proven resilient but plays a limited role in financing SMEs. The structural issues curtail the development of a more dynamic sector in relation to sort of developing other elements of the capital markets. The normal market mechanisms and risk management practices and instruments need further development, and really a lack of incentive to service the SME sector, largely around concerns around the availability of the ability of SMEs to post sufficient collateral, and also some concerns around the governance issues, ownership issues, disclosure. Some of the things that have already been touched upon, and no doubt will be discussed later through the panel discussions and the Q&As. On the corporate bond, the market has developed. It's compared to regional peers, it's relatively developed, but dominated largely by state-owned utilities and banks. Secondary market liquidity is very limited, almost absent, and this has the impact of that there's no pricing reference point, which curtails the development of the market significantly. On the demand side, we're seeing that it's dominated by institutional investors, with no international investor activity, and the buy and hold approach from the investor side compounds liquidity problems. On the equity market, we're seeing it underutilised, not playing a major role in financing. Again, valuation concerns and lack of liquidities are key constraints. The lack of supply and the small free float also are significant impediments. Private equity does exist, and we have some people in the audience today from that sector, so it'll be interesting to get their take on what can be done on this side. And the IPO supply is extremely limited, with sort of very little in the pipeline. Just on the demand and supply reasons for underdevelopment, this is something that we use to illustrate sort of if you like, the circular nature of the vicious circle of sort of what happens when you have lack of supply and lack of demand. I won't go through this in detail, but you can see that it outlines pretty clearly what the issues are in relation to individual companies. There is the historical sort of issues around, listing has never been seen as or potentially not seen as a viable solution for them. Therefore, it's not in their mindset. It's not something that they're considering. The other issues I won't dwell upon here. But this really covers everything around the institutional investor impact if there's insufficient number of local institutional investors, which isn't the case in Morocco. But international investors largely absent from the market, and so the thing we like about this illustration is that really we from an IFI point of view should be trying to address the circular nature of this vicious circle, and trying to make interventions that can have an impact and start to address some of these issues. Some of the improvement levers that were identified through the joint IFI work on the banking sector, allowing higher degree of fluctuations of interbank deposit rates to restore market pricing signalling function, the further gradual liberalisation of interest rate setting mechanism in interbank money markets, introduce risk management tools to reduce maturity and interest rate mismatches. On the equity market, address structural issues to encourage long-term supply, focusing on large flagship issuances and continuous flow of new issues from average size issues. IPOs of state-owned enterprises can help jumpstart the public equity market. Explore options in relation to amending the ownership structure of the exchange to allow it to sort of fully realise its potential in terms of getting new business lines involved in improving overall liquidity. introducing new instruments such as the real estate investment trusts, infrastructure funds, ETFs, and SME funds. And the last one that is at the bottom and very difficult to read is an important one in relation to education and public awareness on the important role that the capital markets can play. And so that companies understand, in terms of risk premium and cost of capital, the benefits of utilising capital market financing. And I think that as good stories emerge, like the one that has just been presented this morning, that can have a very powerful demonstration effect and can improve the perception of the market and the eagerness of companies to at least consider what needs to be done for them to access capital market financing. On the corporate bond market, ensure efficient and speedy resolution of bankruptcy when needed. Also needing to enhance credit analysis skills and consider the benefits of introducing external credit ratings to bond markets as appropriate. Implement capacity building for selection of managers and investor relations management. Encourage local banks to provide secondary market liquidity for their own bonds. Revise valuation rules for institutional investors of corporate bonds to reflect credit spread changes. And there is other issues that are covered, but largely, I mean, in relation to government debt, it's more around the role that it plays in providing a benchmark yield curve to address the pricing concerns, and also the sort of measures to enhance exposure, foreign exposure, so that and the improvements that it can have in liquidity in the system. On the market infrastructure side, again, it's more in relation to the ability to facilitate new instruments as they become relevant, be that REITs, ETFs, and some of the SME funds that we mentioned earlier, and also of the infrastructure for securities lending and short selling, to ensure that the market infrastructure can facilitate this. The last one I've just left in there is Sukuk. It is one of the, if you like, the key themes that has, or key recommendation that has emerged on a regional basis, is the need to develop a strategy for developing the legal and regulatory environment that can facilitate Sukuk, the Sukuk market. Key themes, there will be nothing of a surprise here. There is the sort of the balance to strike between addressing the current needs of the market, but also facilitating sort of entrepreneurial activities and ultimately employment growth, and how do you develop viable and sustainable sources of financing, including via the capital markets. And I think the second bullet point it would be a key takeaway, and a key message from our side would be the need for coordination at the local level, because ultimately this is why workshops like this are so valuable to us, because we really get your input into how we can make the most valuable interventions. Prioritize key actions at the local level. It's all very well, doing assessment reports, but ultimately it's the local counterparts and the local input that can make our interventions a success. And also this allows the sort of you ensure that your utilisation of the IFI community is efficient in terms of investment and technical assistance. And just to reiterate, I guess the last bullet point, it relates to the topic of today, SME access to finance. It's a key topic, regional theme that has emerged from the work we've done in all 4 countries. And indeed, if you looked at the more developed markets, SME access to finance features prominently in recent EU Commission papers on the European Monetary Union, and how SMEs can access finance via instruments such as covered bonds and securitization, and that has really got quite a lot of political momentum in more developed in more developed markets. I think I've covered everything on this. Moving on just to some of the things that are live for EBRD at the moment. We have been involved in the derivatives legislation, which with the Ministry of Finance in providing assistance to develop a fit-for-purpose legislative process for the derivatives markets. On the REIT side, we have our LTT as our legal transition team, and teams from the LC2 as our local currency and capital market development team, which I'm part of, are also engaged on the development of REITs in Morocco. With our guest today, the stock exchange, we have built up a very, I would say, strong relationship, and I think it's something that we can really build on. So there's various areas that are for assistance that are under consideration with the stock exchange, and on SME access to capital markets finance. We've recently commissioned a study on SMEs in the CEMED region, which will include Morocco and Egypt initially, but will also be extended to Tunisia and Jordan, and it's really just to gain a better understanding of SMEs' actual readiness to access capital market funding. I think that, you know, until you delve into the actual local state of play and understand the companies, the corporates that are present in the country, and understand what impediments they face, what is the financing alternatives that they have, what is their mentality, their thinking, then it's very difficult to gauge what their readiness to actually utilise capital market development. And there is also going to be a flagship report on the CEMED region, which will effectively synthesise the findings of the 4 reports that have been carried out to date. And this will identify some of the regional themes, but a lot of what I've already mentioned before in relation to the need for national, committees to coordinate capital market development efforts, and a lot of the recommendations that have been presented around helping SMEs access to finance, these all apply at a regional level also. So the flagship report is currently being finalised, and we hope to have something that we can share with the relevant counterparts and authorities very shortly. Finally, coming to the end of my presentation, a note on EBRD. We think we're very well positioned to deliver on our objectives in relation to local capital market development. We have a private sector focus, plus the range of products and services that we provide across different teams. We're joined by colleagues from our banking team and from our regional offices here today. We also have, the policy dialogue, which would be more in the sphere of the local currency capital market development team, along with TC projects. But the bank also does local currency lending, investment in asset-backed securities, covered bonds, as well as the complete suite of unsecured bond issuance, senior subordinated, and we also have a small business support services team, which we can align our local currency capital market development efforts very much along with these guys who have really a lot of experience already in the region on supporting small businesses. On the equity and bond side, we pre-IPO and IPO investment in private equity funds, corporate bond investments, investments in equity participations in private sector companies. So we feel that we're in a very strong position to contribute to many of the aspects of capital market development. Finally, I've already covered the first bullet point. We feel we can make a meaningful intervention. I think we can benefit a lot from a very open and honest discussion today around what can be realistically achieved, what are the impediments, and how EBRD and other IFIs can play a role in that. Leverage the expertise that we have in the room with an absolutely fantastic turnout of not just local expertise, but also from the international perspective. And I think that it clearly demonstrates that the local commitment to the issue is clearly there, and there's a recognition of the need, to develop alternative sources of financing
for the SME sector, and EBRD stands ready to play a willing and active role. We're eager to move away from recommendations and assessment reports to more on-the-ground actions. So we very much look forward to progressing with that in mind with you today. That concludes my presentation. Thank you very much.